Hey guys, welcome back. Welcome to my channel if you're new. In this video, what I want to do is just focus on the financial sector. I put out a video on the technical analysis of JP Morgan on Friday and put out a trade idea. That trade did not really work out completely. There was some profit to be had, but it wasn't much. I was looking for some more continuation, and we just didn't get that. But that's okay. I also put in the comments where I was going to stop out, so I did stop out. And if you were day trading, you probably could have taken the profit that it gave you during the day, but but I was looking for a bigger move, so I stopped out, took a 15-cent loss or 12-cent loss. I don't remember exactly, but relatively small. And that's, again, the importance of positioning and entries. So just want to point that out. But in this video, what I want to do is go through the financial sector. And I might put out another video sometime this weekend on the technical sector, the FANGs basically, because we got a lot of FANGs reporting last week or next week. But I want to point out some things I'm seeing in the banks and the financial sector, and then I'll leave it at there. So let's get right into it. Let's look at the XLF. So this XLF, this is a bank ETF. It really does a good job of covering a large amount of the banks and gives you an idea of where banks possibly are heading. And what I'm going to do on these charts, I've got the XLF, and then I've got a couple of the big banks. And what I want to do is just really just build the chart out as I'm going in the video. I don't want to have the charts pre-built. I'm going to go ahead and do it right here in the video. So let's get into it. All right, XLF, what are we looking for? Well, first thing, let's look at the daily. So on the daily, you notice we had big crash and then what looks to be like a flag. All right, this looks like it's flagging. Now, the market could do one of two things. One, we're either having a V-bottom recovery or, pretty much a V-bottom recovery, which would give us that. Or this is a bear market rally, which would give us, a downward move. So it could be one of those two things, or we could just chop sideways, I guess, and put in kind of like a L or a U or something, and not actually move up, just move sideways. That would be pretty tough because that would really chop a lot of the bears and the bulls up, not giving us any kind of real momentum. But let's go ahead and just get into it and see where this is going. Let's look at the hourly now. So what I want to do is draw from the bottom of the range, and you can see here I've got 3 data points. I'm always trying to look for at least 3 reactions around to create a trend line. I've got and on the hourly chart, I've got a reaction cluster here, here, and here. And then on the upside, you can see there's a gap. So that's nice to see that, okay, we gap below. So we had a reaction. That is a reaction around that trend line. And then we gapped up and ran up and tagged it as resistance. So I think that trend line's pretty valid. And then on the upside, I only have 2. I really can only find 2 data points that make any sense. So not too much on the upper range, but for now we're just going to have to use the 2 that we have and possibly say that this is a flag. This is a flag that it's creating. And we actually broke the flag, and now we're doing this is basically a back test. So what would I expect to see? Well, from here, given that it's kind of gone sideways, it's undecided. It can either go up or down. But typically, if it goes up, it's just going to run right into resistance here, and then from up here, move down like that. So that's what I would expect to see if it's going to back test. So when stocks do this, I look to get short as we run into that resistance right here. I look to get short here, and with a stop, somewhat above up in here, but I look to get short right in here and then ride the move down. If it decides to not do that, then what it could do is just kind of chop sideways a little bit more and then just head down. Either way, this chart is set up in a bearish posture as of right now because it's below this trend line this is the most nearest trend line, and it's below that. So that will act as resistance when it gets up or near there. So selling pressure will come in, and, buying pressure will not come in until you hit some form of support, probably down in the form of this gap area, somewhere right around here. You might find a little bit of buying pressure. All right, so XLF is set up in a bearish posture. Now, if this is a flag, then what you would want to do is make a flagpole and put out your projected target. And you take it, put it to the top of the range where, the last time it tagged that flag, the top, and then you got the breakdown here. So that puts the projection all the way, all the way down here. And so now what I would want to do is look for, okay, where would we run into support? And you can see it right in here from this cluster here. You've got a reaction right here. And then if I zoom out, you can see as we broke, we had reactions from resistance right there. So lots of reactions from above, a couple reactions here from below on the daily chart. That's a valid trend line. And you can even move it out like that. So that would be your projected target right there. And that to me looks like a good target for the possible next leg down in the bear market. And maybe the final leg down, or at least the final leg for this year. So right around $11 or so would be projected target for a major breakdown. So how will we know? Well, we got to start small. We start on the hourly chart, and you start taking your short positions when you are in an objective range, and then let it work its way down. And as it works its way down, I like to take some profit along the way, so that if it just all of a sudden reverses, I lock in that profit. But I'll always keep, especially for a swing trade, I'll always keep some of the trade for a move all the way down to the projected target. So that's really all I got there. Let's go to JPM. So this is the trade idea that I put out. And again, we had this trend line right here. I had this one drawn out from the other day. And so I saw it started to break, and I figured, all right, well, this is an objective area to take a shot to the short side. We had a confirmation. We had a breakdown right here, a back test, and then a continuation of the move. So that was an objective area with kind of proof. It proved that, okay, it is going to reject, but then it did the fake out move. And this is what they'll do a lot of the time. And I always watch for it. That's something I think you always need to watch for. If you're a trader, you need to understand that a lot of the time, the breakdown doesn't happen the first couple times. It's usually that's usually a fake out move, and you'll see it. So that's why it's so important to scale into your short. If you're going to short, you need to get short on the initial breakdown or the back test. So this would be a great area to get short, or the initial breakdown right here. And you can see if you got short right there and wrote it down, that was a percent gain if you took that. But I was obviously looking for the bigger move. But as it recovers, then you can stop out when it recovers above the recovers back into the trend line like it did, and that's a 0.5% loss. So your risk to profit ratio or risk reward was 2-to-1, and so that's not too bad. Ultimately it was actually a lot better than that, because I was only willing to risk a 0.5% loss, and a 0.5% loss, and the potential gain was huge. If we start to actually work our way down and make the next leg down. So that one didn't work out today or on Friday, but we'll have to continue to watch that. So this one is in a flag, and it's still within the flag. It recovered the flag right here, had the little dip below. So because the dip below and it recovered, I would expect maybe JP Morgan makes a move back up a little bit, and it could even run all the way up to the top of the flag. I could see that happening. So nothing's really broken down in this yet. So we can just say that this is either still making a V bottom or making a bear flag. We just don't know. All right, moving on. Bank of America. All All right, what do we have here? We're looking at the hourly chart here. So again, I'm always looking for 3 reactions, at least 3. So I'm going to put it right there. That's about as good as I can get on this one. I could move it up, I can move it down, but I think I'm going to leave it right about there. So that gives us a, either way, wherever I move it, if I move it down to here or if I move it up to here, we still have a breakdown, which happened right here. So here's a breakdown, not very impulsive though. So let's keep an eye on that. And it's still just right there close to the trend line. So, normally you'd like to see something impulsive. In this, I'd like to see maybe a gap down or some sort of clean candle, rejection candle right here at this resistance line. Until then, it's really a little too close to call to say that it's had a breakdown. I mean, I wouldn't take this. I would not short this saying it had a breakdown. It could easily recover this on Monday. So again, this one also looks like it's just flagging, and it could either be doing a kind of a V bottom or a bear flag. Now, to me, it doesn't look like a V bottom. A V bottom most likely would have bounced off of here. Maybe we had a little lower here and then started to really move up, or on this move right here, continued and moved up. That would have been more like a V bottom. This thing is more flagging. This is basically bear flagging. And it's pretty clear that that's what it's doing. Doesn't mean it's going to have to continue, but here's your flagpole, and here's your projected target. If we go out to the weekly, yeah, and see that drops us all the way down to here. Now I don't see anything. I don't see any real support or trend line, but that's close by on this one. So it's probably going to be something, I don't know, maybe this. Not as clean as some of the other charts. Possibly right there. Yeah, it's not that clean. So I don't know on this one. This one doesn't have the cleanest projected target. So we'll just leave that one as that. Moving on to Citi. All right, let's look at the daily on this one. So to me, it looks like it's flagging. I mean, it does not look like a V bottom. V bottom, again, usually, here's a V bottom right here. That's a V bottom. See how it bounces off and then recovers and, pretty sharply makes its way back higher. That's a V bottom. This does not look like a V bottom at all. This looks like you have a crash and now you're just chopping around, which is a flag. This is what flags do. They basically bounce from a lower range to an upper range, slowly making their way higher. But they never, usually they only make, the most they make their way higher is usually only about halfway. So Citi could easily get all the way up to here, all the way up to this 56 range before breaking down. But let's go to the hourly and see if we can find anything different. All right, so Citi. Yeah. So anyway, it's about there. So Citi has not broken down of the flag. If I drew that right, sorry, didn't draw that right. There's the bottom. It just gave us another reaction, so that's good. We've got 1, 2, 3, 4. So 4 reactions. So here's a false breakdown right here. Broke down, recovered. So that's a fake out. So that tells me that Citi wants to move a little higher before it actually breaks down. So that actually is bullish, and you could be long Citi, and maybe for a move up to the top of the range, up to like 52. That's not a bad idea, not a bad trade idea. I might look at that on Monday. It's a 21% gain in this stock, and that could be a great trade. And the reason why I like that is we had the false breakdown right here. So false breakdown, recovery, that to me looks like a decent long. Although that's just a short-term trade. The bigger term trade, longer term, medium term is bearish. And that's because we've got this flag. We've got a flagpole. We've got a flag here. So yeah, that puts Citi at, looks like it's bear flagging. And I would say the target for that is going to be down here somewhere. That looks like a line of support right in there, right about there. So yeah, I don't know, but that one still hasn't broke down yet. So it is going back to the hourly, still within the flag, not bearish yet. Short term, longer term, this is a bearish chart. All right, moving on to Wells Fargo, which I think is probably one of the weaker ones fundamentally, but doesn't necessarily mean it's weak technically. All right. So this one again, I can't make, I only got 2 data points on the top. And yeah, kind of the same look as JP Morgan and Citi. Looks like a breakdown and a recovery, and just kind of, it closed below the trend line, so it could be a breakdown, but we don't have the breakdown yet, so it's too close to call there. We either pop up or break down next week, and a move up would give us, possibly a move all the way to the top of the trend line right here, which could be a 28% gain. So nice trade there if that's how that stock wants to work. That's short term. Longer term, if you look, this thing's just flagging out, just making a bear flag. You could say the flag's here, and yeah, it just is flagging out. So if this does want to break down, this breakdown here is going to put the bank down here in 2008 crash levels. It will be a financial crash, essentially. I would expect the Fed to step in and do something to stop this, or if it starts to do this, they're going to jump in with major stimulus again. So, more major stimulus because they've already been going crazy. So that's it for the financial sector. That's my analysis. You've got kind of a mixed bag right now. You've got the major ETF has broken down. And then you've got JP Morgan still flagging. Bank of America is still, or has broken down. Citi is still flagging, and Wells Fargo is still flagging. So, a couple have broken down, not impulsively, but they've broken their trend, and then a couple are still there. But the major ETF has broken down, which tells me that some of the junior banks, the smaller banks, are hurting a lot more than maybe the majors. So we'll have to continue to watch and see what happens. I would put a heavier weighting on the sector. If the sector's breaking down, then I would expect that will drag down individual stocks, even the ones that haven't broken down yet. So, yeah, that's it for the video. Thanks, guys. Catch you on the next one.